Sometimes a single headline just lands, and boom, it sends these massive shockwaves right across the globe. It impacts everything, really. Financial markets, sure, but even like the price you pay for gas.
Right.
And that's exactly what we're diving into today, how this recent Israel-Iran ceasefire just dramatically shifted oil prices, changed the thinking on inflation risk, and really rippled through all the financial market.
Yeah, quite the event.
And we've looked at a pretty wide range of sources here. Got the big financial names, Reuters, Bloomberg, Wall Street Journal, but also international views like the Times of India, which really helps paint that global picture.
It does. And our mission really is to figure out why. Why did this ceasefire cause such a fast and widespread financial reaction?
Okay.
It gives us some real insight into how tightly linked, geopolitics and global economics actually are.
Right. Let's unpack that. So the trigger was President Trump's announcement. Israel agrees to a ceasefire with Iran. Markets react like that. But why this time? I mean, we've seen diplomatic moves before, haven't we? Ones that didn't quite spark this kind of firestorm in the markets.
That's a really good question. And what's key here isn't just the news itself. It's how fast the idea of risk, the perception of it, just evaporated. See, for months, tensions had baked this geopolitical risk premium into oil prices.
Right, like an extra cost for potential trouble.
Exactly. An extra cost built in because everyone feared supply disruptions from the Middle East if things escalated. So when that announcement came out, it was like the entire global market just breathed this huge sigh of relief. Gone.
Wow, okay.
And the direct hit on oil markets. Astonishingly fast. Brent Crude, that's the main international benchmark.
Yeah.
It dropped sharply, about 6%. Settled down around, $66 to $69 a barrel.
Which is way down from where it was.
Oh, yeah. Just before, it was hitting 5-month highs over 78 tires. So this was immediate relief, especially for big oil importers, think economies in Asia.
Like India. You mentioned the Times of India.
Precisely. We saw the Indian rupee actually surge because traders anticipated lower fuel costs. That's a tangible benefit, for everyday people there, too.
And it didn't stop at oil, did it? These ripples spread out.
Not at all.
We saw it in the broader markets. U.S. stocks, the S&P 500, NASDAQ, the Dow, they all rallied, jumped about 1%.
A solid jump.
And not just stocks. Currencies moved, too, right? The U.S. dollar actually weakened a bit.
It did. While Asian and European currencies gained some ground, it reflected this sort of improved economic outlook, maybe a bit more optimism outside the U.S. suddenly.
Okay, so connect the dots for us. Oil prices down, stocks up, dollar down. How does this link to, say, interest rates? Central banks must be watching this closely.
Oh, absolutely. This is where it gets really interesting for policy. Lower oil prices mean less pressure on inflation.
Instantly.
Okay.
Breathing room.
Exactly. Crucial breathing room for central banks.
Yeah.
Because it directly helps cool those inflation risks everyone's been worried about. We even heard some Fed officials hinting at possible rate cuts maybe coming sooner.
Because the inflation threat eased a bit.
Precisely. And traders.
Yeah.
They saw this reduced risk and just yanked that geopolitical risk premium right back out of the market, the one that had been keeping prices artificially high.
Right.
It's such a clear example of how market sentiment, really driven by these big geopolitical stories, can shape economic reality almost overnight.
So bottom line, cheaper fuel helps cool inflation. Does that mean it significantly boosts the chances of those rate cuts everyone keeps talking about?
I'd say it definitely nudges things in that direction.
Yeah.
It eases the pressure cooker for central banks.
Okay.
And those rate cuts, if they happen, affect borrowing costs everywhere. So yeah, to sum it up, the ceasefire kicked off a quick oil sell-off that boosted markets globally. Investor optimism went up.
And if the truce holds?
And if the truce holds, yeah, it really could signal a calmer period for energy prices and maybe for central bank policy, too. It just shows how fast the whole economic landscape can change based on diplomacy.
It really is amazing. One event, and you see the effects ripple through oil, stocks, currencies, even Fed rate predictions. It really shows how interconnected everything is.
It does. Which brings up maybe a question for you listening. Think about this deep connection, geopolitical stability, energy markets, global economic policy. How could understanding these links better help you interpret what happens next?
Yeah.
Even events that seem totally unrelated on the surface. How might they echo through the financial world?
Yeah.
Something to chew on.
Definitely something to think about. Well, thank you for joining us on this deep dive exploring that fascinating intersection where geopolitics really meets the global economy.